this recorder. All right, so I recorded the first session and record this one. Okay, so Wall Street having its dance with price. Took us right up to red and falling. Now remember what we discussed. Wall Street comes in, they try to shore this thing up. First obstacle, red and falling. Next obstacle, weekly trading zone. Next obstacle, the BBC. Does everybody understand that? Does anybody have any questions about that? Oh yeah, the chat box works different here. So let me open that. Okay. So this chat box, I guess, doesn't break out like the other one does. I should still be able to see your messages. We can actually try this. We'll see what happens. I just unmuted everybody's mic. Now, you're muted on your end, okay? By default, that's how the system works. I lifted the group mute, but you're self-muted. So if you have a headset, if you want to ask a question, all you have to do is unmute yourself, ask the question, then mute yourself again. Does everybody understand?
Yes.
Excellent. See, it works. Yay. All right. So we're coming up on the top of the hour. I don't think we have any 10 o'clock news today, but let me check. Nope. We have no more high impact news today. Tomorrow is Friday. Okay, so Stephen wants me to check my daily BBC. Yeah, it's at the same spot it's been every day when I show it on the radio show. So it's at 3057. B and Q, it looks like this. There it is on the daily. So we got a swing low so far on the session of 3097. If we go back to our 30-minute. We got an alert, 3096 to 3091. Swing lows, 3097. Okay. So we're still waiting for it now. If price comes back down, we expect support right here. Price reaching up now. Now, this candle, okay, when this candle opened, it went down, it reversed. If we close at the top of this candle, or with very little wick on top of this 30-minute candle, that's going to happen in like 2 minutes. That sets the stage for a potential 10 a.m. reversal. We don't have any news to drive a 10 a.m. reversal. It'll just be price action. Now, the first 30 minutes, some call that the professional half hour. Some call it the amateur half hour. I don't call it anything. I don't pass any judgment on it. I just know that everybody's freaked out about the daily chart. I don't know what to say, folks. I just work with the chart my platform gives me. So I don't know. That's where it is. I can't make it go anywhere else. I don't have any power to do anything else with it. Oh yeah, who just sent me that message? Oh, Crow said that daily looks correct. Yours from the AM had the day before closed below the black step line and the BBC at 2091. That's right, because I remember yesterday now, we hadn't closed quite below it. But I think we had on the Dow. Let's go look at the Dow. Oh, we were right at it. Okay. So, all right. So apparently now my daily chart matches everybody else's daily chart. There was some glitch in it earlier. So they should always all be the same. If you're on DT Pro and I'm on DT Pro, and if we're running a daily chart, or now range charts and tick charts, those can look a little bit different because you're starting your engine at a different time. And it's calculating from the time you started your engine or your computer or you started your charts running. But on time-based charts, you get a new 5-minute candle every 5 minutes. Even if price doesn't move, you're going to get a new 5-minute candle. So time-based charts across the same platforms like DT Pro, or if everybody was on Ninja, they should be identical. They should look the same. Okay. All right. Well, I'm glad we solved that. I don't mind a mystery that I can solve. It's kind of like when my computer has an issue and I tinker with it and the issue goes away, but I never really found out what the issue was, and I don't really understand how I fixed it. That's really frustrating because I know it's just a matter of time before that thing creeps back and does it again. Okay, so I was looking to see what kind of news we have tomorrow to move the markets. 9 a.m., 8:30. Tomorrow we have no high impact news tomorrow. We have news, but I don't see anything with 3 little steerheads. I use investing.com as my economic calendar. Michael uses a different one. They're all basically the same. Some just grade certain markets as high impact and others as not. Man, I don't know who is relentlessly calling me, but I can't answer the phone right now. Okay. All right. So let me see what. See, I have to scroll this chat box. Okay. All right. Okay, so we know what we're looking for. We're at the top of the hour. We have a new 30-minute candle. Okay, remember what I said about the 10 a.m. reversal? This candle started at 10 a.m. Eastern. Also, my charts are set to Eastern time. You see right now how when I hover over this candle down at the bottom, it lights up 10 a.m. But if you look in the bottom right-hand corner of my chart, it says 7:03. That's because I'm on Pacific time. Arizona doesn't do daylight savings time. 8 months out of the year, I'm on Pacific time. So my chart is Eastern. Computer clock tells you my time zone. And when I take a snapshot in Telegram where the time shows, it's going to show the time on my computer clock on that image. But in your version of Telegram, it's going to show you whatever time zone you're in. Okay. All right. So we had highlighted this area as a potential support area. It gave us a bounce from 3104 up to 3118. 10 a.m. came, and without news, we still got that 10 a.m. reversal. So what's important now? Well, this low right here. this swing low is 30.97. And where did we set our parameter? 30.96 to 30.91. Now this is a spot where I would almost, can you expand on 10 a.m. reversal, please? The markets have a tendency at 10 a.m. If you have an incredibly bullish or bearish move on the 9:30 opening candle that closes with very little wick on top or very little wick on bottom for bearish, then the markets often reverse. There's not much I can expand on that other than it's a phenomena that I've just seen happen enough times that I just started pointing it out. And the guys that have been part of Logic 247 passport holders for the past 97 weeks, I used to post every morning when I thought the conditions were proper for 10 a.m. reversal. I haven't been doing that in a long time. Now, here's a dynamic you should probably know about the open, okay? We've got, on the 30-minute opening candle, we've got a high here. We've got a low here. Now, this is one of the oldest, probably most common trading strategies out there. And the strategy is simply this. If we break the high of the opening candle, a whole bunch of people are going to go long. And when we break the, or if we break the low of the first 30-minute candle, a whole bunch of people are going to go short. There's different names for that setup. I've heard it called, I think I even have a PDF somewhere called Trading the 10 a.m. Bulls, which doesn't say a whole lot because the trade setup is that you'll trade a bullish move or bearish move. There'll be days when you see this wide opening range on the 30-minute, and then I've seen the market just go quiet and not take out that high and not take out that low for an extended period of time. Now, it's not a trading strategy that I employ or use myself. I don't have anything bad to say about it. It's just not something that I personally use. If you watch it for a while, and if you find some kind of regularity in it, and you know you're able to trade it in sim and be consistently profitable with it, then by all means, you know, if it works, use it. But always trade it in sim first. So there's not a lot else we can say about what's happening right here, right now. We have an area that we would go short. Oh, I started to talk about the too close rule. See how this candle came all the way down to 30.97? I've already said 30.96 publicly, so I just leave it out there. I don't like to change those kind of things. But really, 30.95 kind of makes more sense now, because I want to make sure price is serious about breaking this low. So if you wanted to change that to 30.95 to 30.91, that would be okay. Now, we didn't talk about crude, so let's go look at crude, because the S&P, as long as we stay inside of that opening 30-minute candle, I'm not looking for a lot. Now, could a trader come in here and go, okay, well then why don't I trade a break of this low, 3102, you know, down to like 30.99? Is that doable? Well, let's investigate that for a minute. And then somebody remind me to go to crude if I just start rambling. Rambling man. He was a rambling man. All right. I got a banjo. Okay. So what are we looking at? 5-minute chart. Price pull back to the BBC. Okay. So I know we've talked about this in workshops. People have asked a lot of, this is one thing that people have actually asked a lot of questions about, and that's a good thing. And I've tried to come up with all kinds of different analogies to convey the concept. And maybe one of you guys have come up with an analogy that really makes it clear to you. And so if so, share it with the group. The trade setup comes from the 30-minute chart. Hold on for me 1 second, guys. Okay, sorry, I'm back. Let me just make sure. No more questions. If I missed a question, guys, put it back in the chat box or just uncork your mic and ask. Okay, so the 30-minute chart. This is where you get your trade set up. Like a pullback to the BBC, a break of an important low, important high. And then the only reason to go to the 5-minute chart is to time an entry. Okay, so let's see, this pullback to the BBC happened at 9:15. So that was actually during the life of this 30-minute candle. 5-minute chart, come back. Okay, now when you set up charts like this little pen, if you use DT Pro, if you push that little push pin, now when I click over here, my 5-minute doesn't disappear. This pins it on top. Then you got to remember to unpin it when you're done. So price on this candle, no, this candle. This candle's pulling up to red and falling. At the same time, the 5 minutes pulling up to red and falling. Now, when you get to this point right here, if your idea is that you want to be short, as long as you're printing a green candle, which we did from 9 to 9:30, if you're printing a green candle, you don't want to be shorting a green 30-minute candle. Like right now, we're printing a red candle, so we want to go short. Now, we just pulled back to the BBC on the 5-minute. And blue and climbing just turned red. So if I want to take a short off of this area, a break of these lows, which is about 3101, takes me down to 3098. Okay, price pulled back to the BBC. Now, this is very jagged because this all happened around the Wall Street Open. And maybe this helps you see why I stay away from the Wall Street Open. First, we're going up. No, we're going down. No, we're going back up. No, I said we're going down. Up. Right? Come over here. See, this is good trading opportunity. Look at that. Price mostly staying on the left side of the step line, right? And red and falling. Now, hopefully everyone sees why this is better than this. See, this whole area right here. That's just the market chopping back and forth, and it still hasn't broken either the high or the low of that opening 30-minute candle. And again, let me say, this opening range trade, while some people use it and use it very successfully, I'm sure. I mean, because they've written PDFs about it, so I guess somebody's using it successfully. I don't personally use it, but I don't have anything bad to say about it. It's a strategy. But what I would do is I personally wouldn't trade just a break of the high or break of the low. If it breaks the high, I would wait for a pullback to the BBC, and then as it starts to resume the uptrend, I'd go long. If it broke the low, I would wait for price over here on the 5-minute to pull back to the BBC and start to go lower, and then I would go short. Okay. So any questions? Let me look at the chat box. Joseph offered trending versus chop. Yes. And I don't use the term chop personally. I use the term consolidation. Really what it's about, and no terms either right or wrong. It's just people use different terms for different things. It's always interesting to me whenever I get around a group of traders that are like hung out with a particular room or they've learned from a particular guru. Everybody speaks that language. You know, it's still English, but it's like a dialect. It's like when somebody comes into our space, right? And they start hearing BBC and WTZ, and they're like, huh? What is that? Right? It's a foreign language to them. We all know bull, bear, cross, weekly trading zone. So there's really nothing to do here at the 5-minute, because the market either needs to break above this high and make a run at resistance. Does everybody understand why when price pulls up to the weekly trading zone, we expect it to be good resistance? Only 3 things happen at a weekly trading zone. Consolidation is the most likely. Second most likely is rejection. The third and least likely is the slice. Okay. Your 30.95 to 30.91 wouldn't necessarily be a retracement trade, though, correct? A retracement trade. It depends, Crow, on how you choose to trade it. You could trade it just as, you know, as price breaks this low, right, at 30.95, you're hoping that there's enough bearish momentum to carry it just, you know, 4 points, 30.95 to 30.91. In a situation like that, right, you may not get a pullback in this area. You probably will after it goes from 30.95 to 30.91. Chances are it might catch a little bounce and come back to the BBC. So in a typical trend trade, waiting for the pullback to the 5-minute BBC is important. What you don't want to do is you don't want to fight the 5-minute. Okay? And by fight the 5-minute, I mean if price is below the BBC, let's say you got a beautiful short trade setup happening here for whatever reason. Use 30.95 as an example. If at 30.95, if price is above the BBC, you can't take a short trade. The 30-minute gives you the idea. I mean, the other night I think I said something like the 30 minutes the freeway and the 5 minutes the on-ramp. But here's what happens is sometimes people get caught up in the smaller time frame vortex. You lose perspective, in other words. You're watching the 30K, you look, I think I got a short setting up. And so you go to the 5-minute and then you completely lose context with the 30-minute. Now you're in this vortex, you know, where this thing's giving you no direction whatsoever. Unlike back here, okay, price got, we had been falling, you know, for hours, most of the night. And on our 30-minute, we knew, now this happened at, this was a good example, okay, at 5:30 this morning. So let's find the 530 candle over here. There's 530. Okay, so we know that price is trying to pull back to the BBC. This is a great example. Price is trying to pull back to the BBC. There was so much bearish momentum, it couldn't make it, it couldn't complete the pullback, right? Okay, but you don't know that yet because you're still on the 530 candle. So price gets above the 5-minute BBC. Okay, so now I should be taking long trades. So when price pulls back here to the BBC, I'm going to go long. No, 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 no. You're below the 30-minute BBC. You're only going to take short trades. So this is an aberration, okay? You want to wait until price gets back with the program, the 30-minute program. You see, as we start to build this 30-minute candle at 6 a.m., okay, there's 6 a.m. right there, that candle. That's the beginning of this red 30-minute candle. So what do? Do we get short right here, right now? No, because when this candle opens, it could continue higher to the BBC, where we expect to find good resistance, right? However, the bearish momentum was so great that we just, after a short pullback, two candle pullback, we continued down. So over here, when this thing gets above the BBC, you just completely ignore that. You're waiting for price to get below the 5-minute BBC, which now puts it back in context with the 30-minute chart. Because on the 30-minute chart, below the BBC, you're only looking for short trades. And if you're above the BBC on the 5-minute, you can't take a short trade. You've got to be below. Now, look what happened. Price closed below the BBC, gave you a little leg, pulled right back up to the BBC, gave you a down close, so you're red and falling. You had a leg, a retracement, down close, selling the open of this candle at, I'm sure the candle had an opening price, 31.3375, right? You get short. Leg, retracement to the BBC, and now you're lined up with the 30-minute chart. So even when the market's printing these two green candles, you just step aside. Because, well, I mean, you can trade the counter trend if you want to, but this is a perfect example. Price doesn't always pull all the way back to the 30-minute BBC. So this is why I don't publish the counter trend trades in the alert channel. I only publish the trend trades simply because they have a higher probability of having a positive outcome. Doji on 5-minute, does it indicate to take a long trade on the 5-minute? No. Now, Anjum, help me understand your question. Are you talking about this Doji? If you have a microphone, you could always open up your mic if you want to just talk. So let me rephrase this. Does anybody have any questions about what I just covered? You're not going to trade this move up unless you choose to trade counter trend. Price has been falling, falling, falling. And when you're in a downtrend like this, when price pulls back to the 5-minute BBC and you get a down close, you sell that baby. From 31.36 down to 31.26, and then it pulls back to the BBC again. Down close. Sell that baby. From 31.31 down to 31.21. It's like two 10-point moves, right? This is in keeping with the 30-minute trend, which is down. Somebody
Dwayne,
open the mic. Yes, go ahead.
So I'm understanding this. We're in a downtrend.
Yes.
We're pulling back to the BBC.
On which chart? The 30-minute or the 5-minute?
You were just demonstrating the 5-minute.
Mm-hmm.
And I'm still understanding by looking at the 30, I love your chart setup, by the way, that it's still a downtrend. So I'm only taking profit from the BBC down to the sideways move, let's say at the 310 time frame, which is where the down move hit support, right? And you see the green candles are building back to the BBC, correct?
Okay.
Again, so
you might be overthinking it, but you've got a downtrend on the 30-minute.
Correct.
You get a bearish cross on the 5-minute.
Correct.
Price pulls back to the BBC where it finds good resistance, which is what we expect.
Right.
So when the market starts to continue the leg that lines up with what the 30-minute chart is doing, you go short. And then price pulls back to the BBC again on the 5-minute. You look at your 30-minute. Okay, we're still in a downtrend on the 30-minute. So as price pulls back to the BBC on the 5-minute and gives you a down close, you go short again.
Short again. Okay.
Yeah. Does that clarify it?
As long as we're in that downtrend by looking at the big picture on the 30-minute.
Yeah, you're only going to take short trade setups. And the purpose of the 5-minute is to give you an entry, like in this case would be the open of this candle.
Right.
31.3675. And
Correct.
then your stop loss is right above the swing high.
Gotcha.
So, and then once you define your entry and define your stop loss on the 5-minute, then put that sucker away because it'll just make you nervous. Because with every little tick, you'll be going, oh man, oh.
I used that word this morning. Thank you for clarifying. It is a nervous.
Yeah, it's nerve-wracking. Don't do that to yourself. You go back and watch this guy, right?
Gotcha.
It will. It's like one of those little blue pills. It just kind of makes you feel calm. Not the little blue pill before you go to bed, but the other little blue pill. Mother's little helper, they called it back in the 60s, right? It's just, it has a calming, soothing effect, at least for me. Now, there are other
I understand that now. Yes.
There's other people that are probably wired differently. They're, just go kind of people. And maybe for them, watching the 5-minute actually works better. I don't know. Now, we've gotten 27 minutes into this candle, and we've still not broken the swing high or the swing low of the opening 30-minute candle. So picture, if you will, traders around the world, and this is a strategy that's, I'm sure, implied by a lot of prop desk traders, traders at Goldman Sachs, other institutions. If we break this high, they're going to go long. They're going to wish they hadn't, but they will. And if we break this low, this thing could really accelerate to the downside as all these traders from around the world, from retails to institutions, see that as a trigger, and it accelerates everything to the downside.
Could you slide your 5-minute chart over to the current 30-minute candle?
Oh yeah. Right.
Thank you.
Right there.
Okay. So there's really no trade in there, right?
No, there's nothing in here right now because it's just, it's a mess, and I've encompassed the mess in this little box.
Got it.
What we want to do is we want to break out of this box. So the 5-minute, let's say it breaks to the downside. Okay. Now you could trigger in on this idea we have of 30.95 to 30.91, or you could just patiently wait for a pullback to the BBC on the 5-minute, a down close, and then you have an opportunity to short. Let's say this thing drops to 30.86. Then it pulls back to the BBC. Down close. Okay, so you enter on a short. What's your reasonable target? Down wherever that last swing low was. Yeah. So reasonable target, reasonable expectation. The 5-minute allows you to define a smaller stop loss that you might have to employ using the bigger picture 30-minute. But that's the only purpose of the 5-minute. Now, there's some people who just trade the 5-minute chart, and that's okay. There's nothing wrong with that. It's just not how I personally use the 5-minute.
You explained that by looking into the 5-minute, you lose perspective of the 30-minute trend in play.
And it will play games with your mind. All right, guys, here we are. Look at the 30-minute. It's the moment of truth. Are we going to take out that opening low? And if so, does that accelerate us to the downside?
I'm going to mute myself.
Okay. So look what happened. We get a new candle. 7:30 my time, 10:30 Eastern. We don't take out the swing low. We came so close. Now, so we watch this 30-minute candle. And we want to see what kind of energy does it have. I mean, are the buyers serious about driving this thing back up? Or is this kind of lackluster? Now, something to understand about how price moves. In order for this market to rally, requires financial commitment. Institutions, big traders, they've got to put money to work, money at risk to send this market higher. The opposite of that is, in order for the market to continue dropping, all that has to happen is buyers stop buying. At some point, buyers go, man, we keep throwing contracts at this thing, and price isn't appreciating. So what do? They just step back. And when buyers stop buying, the market falls quick. Doesn't even take a lot of selling pressure. Just the fact that buyers en masse, like a school of fish, you've ever seen a school of fish, they just all turn left at the same time. I don't know how they do that. They have no turn signal that we can see. But you see that kind of activity in the markets. It's like everybody got the memo at the same time. Buyers stop buying and the market just plummets. Okay? But then when price gets to an area that's so irresistible, I mean, yesterday people were paying $31.70 for the S&P. Today I can buy it at $30.70. Wow, that's an incredible discount. That's a 100-point discount. That's $5,000 per contract. They can't resist, so they come in, they start nibbling. And if enough of them start nibbling, then price will start to rise. Obviously, we got enough nibblers right here. We're taking price back up. So again, this is why it's important not to jump the gun, not to be driven by FOMO, the fear of missing out, but to be patient and wait for the trade to come to you. And for us, the trade coming to us right now is either 30.96 or 30.95, however you decide to trade it. And there's two ways to trade it. You can trade it as price just drops down through that number, or you let it drop through here, and then you wait for your pull back to the BBC. And if it holds, and then you get a down close, you've got a much higher probability that that trade is going to work out in your favor. In order for the 30-minute to print a green candle, the 5-minute has to build a series of green 5-minute candles. Red candle. Well, we had more red candles. There's 6 5-minute candles. 1, 2, 3, 4, 5, 6. So we had more red candles than we had green candles. Okay. Now, at this low, okay, buyers came in. They swarmed it. Well, but they swarmed this area earlier. You know, go back 2 candles on your 30-minute, right? When price touched this area before, I mean, buyers were all over that thing. And we just barely broke that low. So when price breaks a high or a low by like just 1 or 2 points, be very suspicious of that. That's why it's a good idea to let it break it, do its thing, then wait for the pullback on the 5-minute, and in this case, give you a down close, and then go do business. Would that have worked out over here? Well, by the time you got a down close below the BBC, you were already back to support, right? So this right here is just something to leave alone. You're looking for, again, you're getting the idea, you're getting the trade set up, you're getting that off of your 30-minute chart, but you're waiting for the 5-minute to just give you a tradable setup based off of the 30-minute. All right, so let's go look at crude. I said we would do that, and we haven't yet. So let's, while this sorts itself out, because we got nothing to do here. We're not going to buy this market. And when you're printing a green 30-minute candle, that's all you can think about is buying. But the fact that we're below the 30-minute BBC, that removes that part of the equation. Well, we know we're not going to be buying unless price can get above the 30-minute BBC. And we're printing a green candle, so there's just nothing for me to do here. So I'll go look at crude. All right, here's crude. Crude made it. Okay, here's a great example of zones being an area, weekly trading zones. That zone is $36/3605. 36/3605. Okay. All right, so price came down, almost made it to the zone. Zones are an area. So we got an opportunity coming up right here as we take out the low of this green candle. Window of opportunity, 36.60 down to 36.30. That's a $300 per contract move in that square. The closer you get to this low, the higher the probability that buyers will step in and try to drive it up again. But what I really want you to get is that price closing below that low, or at least taking out that low. See, we've got a leg. Look at the top of this leg. The wick on this green candle poked up through red and falling. You see that? That's the top of that candle right there. Okay. So we've got a leg. Now this red candle is a retracement. This retracement should go no lower than the low of this candle. Because here's what's happening. We're either drawing legs to the downside, leg, retracement, leg, or we've just started building legs to the upside, leg, retracement, leg. And so this area right here, that's pivotal, okay? That's the difference between building legs to the upside or legs to the downside. If this red candle takes out that low, then the highest probability is that we're going to go back down to test this low. However, if we have actually started to build legs to the upside, leg, retracement, leg, taking out the high of this candle tells us that we're going to the weekly zone overhead. Taking out the low of this candle tells us that we're going to test the zone below. Now, that's a lot. I just threw a lot at you. From here, price is either going to try to break that swing high or that swing low. It's just what price does. It's just how price moves and operates. It's always on a mission, always trying to break something. It doesn't make it it's not a bad thing. It's just, it's either trying to break a swing high or swing low. So from here, if we take out this high, it's a high probability we'll go to this zone. If we take out this low, it's a high probability that we'll at least go down and try to challenge this low, and most likely on this trip, maybe make it all the way to the zone. Let me pause, let that sink in, and if you have any questions. On a situation like this, do you still need to refer to the 5-minute chart? You don't have to. It's always, in most cases, a good idea. But it's the premise of the trade that I want you to understand. If we print 37.25, in other words, we take out this high, then the market's trying to reach up to the BBC, the weekly trading zone. Price always reverts to the mean. And if this candle takes out this low, then the market's most likely trying to come down, break this low, and get to this weekly zone. Pretty cut and dried, pretty simple. That's how you want trading to be. There's a lot of convoluted stuff out there, complicated, convoluted, and horribly expensive stuff. I've said this a few times over the last couple of weeks. I'll just say it one more time. Trading's not easy, but it can be simple. All right. Vitamin C is simple. Vitamin C can cure a lot of stuff. But Big Pharma doesn't push vitamin C because there's no money in vitamin C. There's no huge profit in vitamin C, right? Okay. The way I teach markets is very simple. And based on what I charge, you can tell there's not a lot of money in that. I mean, so all these vendors, right, with all of these complicated solutions, see, they have to complicate the market. They have to present you with a lot of confusion so that they can then sell you a solution. Oh, you want to solve the crude markets? Well, you need this solution. Oh, you want to solve the gold market? Oh, you want to trade gold? Then you need to go to this weekend seminar, and you need to buy this video series, and blah blah blah. You can. So in other words, people are creating confusion so that they can sell you solutions to problems that don't even really exist. From here, I promise you, hand to God, right? Price is either going to go to that weekly trading zone or that weekly trading zone. It's going to do one or the other. This candle takes out this high, then it's most likely going to that zone. If this candle takes out that low, then it's most likely going to that zone. You can ship all those packages back. Turns out I won't be needing this course for 20, however many thousands of dollars. I'm sorry. You can have your course back. Because the guy showed me something this morning that I never saw before. And it's like really simple. It really is. Trading's not easy, but it can be simple. Now, I'll never profess to know that I know which way it's going to go. I don't. Nobody does. God did not give Adam the ability to change the past or know the future. And those two things are inextricably linked for eternity. But yet, as you go to all these websites and you get these emails, it's, all these people have one-upped God because now they can tell the future with certainty. No, they can't. They cannot. Every move in the market's a coin flip away. It's going to do one thing or another. So if you can just learn to be patient and let the market make it obvious what it's trying to do, then all your job is then to just go along for the ride. And that 5-minute chart can help you enter the race or board the train or get onto the freeway and minimize the collateral damage. I'm at a loss for words. That's odd. Scrolling down to see if there's any other questions. If you add the histogram to the chart, you can see the volume at each price. See, there's complication. And thank you very much for the suggestion. If you add the histogram to the chart, you can see the volume at each price. That can help see those consolidation points for me. Obviously, difference between the Globex volume and the daily volume. Right. But you see, for me, that becomes a step towards complication. Now, if that helps you, then you should absolutely use it. If it's a tool that you've used and it's contributed to your bottom line and it's helped you, then I would never, ever ask you to, get rid of it. Now, if you come to me in mentoring sessions and you show me something, yeah, I got this thing, I bought off this guy, years ago, and first question I'm going to ask you, has it ever made you money? Oh, yeah, on a consistent basis. Well, then get rid of it. I mean, of course, you can still use it, but don't bring it to the mentoring session because I don't know what it is. I don't know what its track record is. And I don't want to talk about things I don't understand. So I'm always going to try to take things back to the simplest common denominator. And that is, price can go sideways for a while. Well, we got evidence of that, don't we? Right here on crude. And on the 30-minute chart of the ES, right? See what it's doing. It's back down testing that low again. This is the market going, but the market only goes sideways for a while. Then it does one of two things. It goes higher or it goes lower. Now, whether you're here, this is your first day here, or you've been with me since 2005, what appears to be the high probability thing here? Breaking the high of the opening candle or breaking the low? Well, obviously breaking the low, but it ain't happened until it happens, right? I mean, earlier it looked like we were going to break that low, but we didn't. We ran all the way up to where? Red and falling. And what happened at red and falling? We found resistance. Now, price is starting to walk sideways here. When price walks sideways after a big move like this, okay, price walks sideways, this step line, see how the step line's on the left side of red and falling? If we continue to walk sideways or consolidate right here, then the step line is going to cross. Well, here's a great example up here. You see on this move down, how the step line was on the left side of red and falling? And then as we hit this zone and found support, the step line ahead of time switched from the left side, it crossed over. And so the first green candle that closes above the step line, after it crosses from the left side to the right side of red and falling, that's your exit signal. And then, of course, this would be your signal that the trade's on again, okay? So you made money coming down. You don't know how far it's going to retrace. Take your profit here, and then if the move continues, you can get right back in. Cost you a little more in commissions. Here we go. Let's see what happens. Now remember, a lot of traders who trade that 10 a.m. strategy, whatever they call it, if they come piling in here, we should see an acceleration to the downside. Will we? I don't know. Neither does anyone else. No matter what kind of hype they present you with, at the end of the day, we're all like Adam. Can't change the past, can't know the future. What we can know is what the next high probability move is. And because we're below the BBC, if for no other reason, we know that the next high probability move is to the downside. Until when? Until we get above the BBC. Then we know that the next high probability move is up. Until when? Until we get back below the BBC. All right, let's see what our 5-minute looks like. Okay, so 5-minute breaking, right, to the downside. So we've cleared this area, this noise, if you will. So where did we say that the market might find support? We said it might find support at 30.90. 30.89, 30.90. Okay, so let's say price, now you could chase this, and how many times have you chased a move like this, and the second you get in, oh man, it reverses, it goes the other way, right? Don't do that. Let this thing find some support. It will, somewhere along the way, okay? And when it finds that support, it will pull back to the 5-minute BBC, where you'll wait for a down close, and then you'll enter on the open of the next candle. Let's say this candle right here shot right back up, and then the next candle closed below the BBC. This would be your window of opportunity from the entry to the previous swing low. And in this case, that's 31.01 down to 30.93. Picture that in your mind's eye. This little bitty green candle just works its way back up to the BBC, finds good resistance, gives you a down close, you enter on the open of the next candle, and then you get out before you hit this swing low. All right, so the swing low so far, 30.92, and we were hoping for 30.91. Okay, here's another little tidbit. As you approach a target, don't be afraid to put price 2 ticks, or I mean your stop loss 2 ticks behind price. Okay, you may not get the full target. It may back up and just take you out prematurely. It might cost you a point out of a 4 or 5 point move. But the good news is you kept part of that move, because from here, this thing could shoot right back to the BBC. Now, when I said that, I wasn't really thinking it would turn right there on a dime, but it did. Okay. So maybe on that move, from 30.96 or 30.95, you got whatever you got, and then you aggressively moved your stop. Because remember, yeah, I mean, who doesn't love to get 4 or 5 or 6 or 10, or as some of you last night got 100 points on the Dow or whatever. Oh, by the way, those big picture trades, guys, I've published them 3 weeks in a row. And each week, by and large, they've produced about $3,000 plus per contract per market. Per contract per market. So if you haven't been watching those, if you haven't been following those, take a look at them. Next time, I was publishing them every Saturday night, and then because my computer blew up, I missed Saturday night, but I put them out Sunday night. And then Monday, because the market moved higher, I was able to adjust the entry higher. So it made it an even better trade opportunity. Okay. All right, so we're still dealing with a swing low of 30.92. Hey guys, we're coming up on the top of the hour. I didn't expect to run this session this long. Todd's out with his 2 points. Ding! I got a backup bell downstairs. I'm going to get that before the show. I was just trying to clean up before the computer guy came. Straighten up a little bit. Somehow, you don't think he pocketed? He may have pocketed my bell. Probably not. He can afford his own bell. Okay. Now,
one question, please.
Go ahead. You got an open mic. Go ahead.
The box you made on the 5-minute chart, the price came back and then it retraced back to the BBC. At that point of time, can we take a trade?
Okay. So let me make sure I got this. If price comes back to the BBC on the 5-minute,
yes, on the left side,
and it gives you a down close, could you then short back down to this low? The answer is yes. If that was your question, the answer is yes.
Joel, I'm talking about the box which you made. The price came down. No, on the left-hand side.
Oh, this one.
Right. 20.
Okay, what about this box? I was just highlighting that we were in a period of consolidation, wide-ranging consolidation, noise that we wanted to stay away from. So Ask me the question one more time.
Yeah, in this box, the green candle printed and it retraced back to the BBC. And then the down close, and then we can take short over there at 3104.
No, we were waiting on 3096 or 3095 to trigger us in. We wanted to get below the noise. See, now that we've gotten below the noise, see, this is all non-tradable, okay? This candle signaled the fact that we finally broke free from the noise, okay? So now on your 5-minute, you just patiently wait for price to pull back up to the BBC, give you a down close, and then you would short back to whatever the swing low is over here. Now, you know, in an aggressive bearish market like we have on our hands here, you know, you might not get that pullback for a while. It might not come till later this morning, maybe even this afternoon, okay? So you have to decide, if I define an important area as we did over here, am I going to just trade the break of that area, or am I going to wait for the pullback? Now, waiting for the pullback gives you the higher probability, lower risk opportunity, but you won't always get that pullback when you want it. You have to trade the pullback when the market chooses to give it to you. Okay. All right. So
thank you very much.
Oh, you're very welcome. And if I can help you, additionally, book a mentoring session with me, and you and I'll spend 45 minutes together one-on-one, and you know, I'll do whatever I can to help you, whoever you are. I'm not sure who's talking, but thank you very much for stepping up to the mic. Oh, that's Anjum. Hey, Anjum. Yeah, you know how to book a mentoring session. Yeah, book a session with me anytime, brother. Always happy to help.
Okay, all right. Yeah, thank you.
Okay, guys. I got to get over the makeup trailer for the radio show here in an hour. Ding. Just kidding. I don't really have a makeup trailer. It's more like a hut. No, I'm kidding. Any other questions? Anything you guys want to look at? Let me scroll down. Scrolling down, got my goal on ES and oil. You guys, thank you very much for your kind comments. I won't read those all out loud because I would blush, but it's very nice of you. It's nice to be appreciated. I mean, we all know that. I guess real men don't need appreciation, but I do. So validate me from time to time. I won't say you complete me. That would just be creepy. Okay, so let's look at crude one more time before I go. Okay, all right, so we were festering over this candle. Is it going to take out the low or the high? It took out the low. So now, what are we looking for? Well, I said from where this candle was sitting earlier that it would either break that high or that low. Yeah, and that's not magic, that's just logic. It's got to do one or the other. So it broke to the low. Okay, so now what's price going to do? It's going to go look for support because it found resistance. So now it's going to go look for support. Where's a reasonable place for support to come in? Well, it could be at the low of this candle. Could be at the weekly trading zone. But now, let me layer on one more dynamic, because if I didn't leave you just a little bit confused, I wouldn't have done my job. Situations like this, sometimes buyers will come in early. Now, this was only a 2-candle rally, but you know, imagine that this had been a much bigger rally, and then price came all the way back, almost to where that rally started. Traders who missed that move, maybe they've been called on the carpet by their boss. Price just ran up 100 points. How, you knucklehead, how could you possibly miss that trade? Ray Charles saw that trade. And so the trader slinks out, goes back to his cubicle, and as price nears that area again, he's like, boy, I'm not going to look stupid this time. I'm going to buy my ticket early. If enough people buy their ticket early to go long, then price won't make it to that exact swing low. I hope that makes sense, because that's one of my best analogies. Is that an analogy? I don't know. I really should have finished school, but anyway. So price creeping down. It's in no rush. It's in no hurry. Now, somebody asked me to look at a market I don't normally look at, but I'll look at it because I see all markets the same. Have you looked at the Aussie dollar 6A? Nice volume on the DOM. Okay, it's not something I normally track, but will I take a look at it right now? Absolutely, just because it's an opportunity to show you that from my belief system, all markets are the same. You know, people say, oh, you can't trade gold the same way you trade the Russell because they have different personalities. I'm not looking for a date or a life partner. I just want a high probability, low risk trade. Okay, so the Aussie dollar is 6A, not A6. Aussie dollar, June. Okay, so we'll start out with a daily chart just to get our bearings, because I haven't looked at this in a very long time. What did I do? Oh, I went a year into the future. How about 6AM20? There we go. That makes sense. There we go. Now, I don't have any weekly trading zones to guide me on this, but the Aussie dollar is on the daily chart. It's below the BBC. It's below the step line. I mean, this whole chart really reminds me of the S&P daily. I mean, there's obvious differences, but I think you get the idea. Maybe it's more like the NQ. I have a phone number that I never use, and I've had 10 calls on it this morning. That number must have got on somebody's telemarketing list or something. All right, so from a daily perspective, we know the Aussie dollar is dropping. It's taken out this swing low, and so there's really nothing in its path all the way down to the BBC from a daily perspective. So let's go 30-minute. Okay. Oh, sweetness. Look at that. 30-minute bearish cross, price pulled away, price pulled back, down close, bam. And price starts to walk sideways. Price gives you an exit signal. Price continues to pull back up to the BBC. If you've not read The Secret Life of Candles, which is just a little PDF I put together back in 2012, if you Google CFRN, The Secret Life of Candles, you'll find it. It's a free PDF. You can download it. There's like 200 candlestick signals, but some are really obscure. You don't see them much. But there's 10 major ones that you see all the time, like this. In this context, that candle speaks volume. It screams, go short, okay? In this context, that candle. Similar to these candles. The fact that the wick is sticking up above the BBC, selling the open of this candle, boom. Now, the bearish momentum got so great. Here we pull back to the BBC. Here we pull back to the BBC. Here, you know, we missed it by a tick. So remember, we said that on the daily, we had nothing between us, below us, that we could readily see on a daily chart, all the way back to the BBC, down. Okay, so here's where price has been. Okay, so there's a window of opportunity on the 6A based on the 30-minute chart. Okay, we want to take out this low, and then our window is 6875 down to 6864. I have no idea how much money that is because I don't trade the Aussie dollar. But on investing.com, here, let me just show you this. This is worth taking a minute to show you. on investing.com, they've got a little calculator. Tools. What am I looking for? Profit calculator. Okay. All right. So what you do after you close down all the ads, go to futures, and then we're talking about the Australian dollar. So you just type in Australian dollar, which is the Australian dollar. Okay. So if we were to go short at a price of 0.6875. $0.6875. 0.6875. Okay, and then what did we say we would use as a target? 0.6864. 0.6864. Okay, then you click calculate, and it tells you $6.875 down to $6.864. It's a $617 move. No, that doesn't even make sense. What did I do wrong? Oh, I put the decimal point in the wrong place. Yeah, that'll leave a mark. Okay, now calculate. Okay, that makes sense. So that's only a $100 move. Okay, per contract. 10 contracts, it's $1,000, right? So that's my story on the Aussie dollar, and I'm sticking to it. But again, let's go back real quick to the daily. Because this thing has the potential to fall much further than what we just saw. Let's see what these numbers look like. 0.6871. 0.6871. And then the BBC is at 0.6768. 0.6768. Calculate. Ah, now that's a $1,000 move. 10 contracts, 10 grand. Okay. And that's based on the Aussie dollar going from where it is now down to the daily BBC. And it's been a while since it's pulled back. Remember, price always reverts to the mean. Pull back to the BBC, it held. It held. It held. It held. Hasn't pulled back in a while. Price always reverts to the mean. Eventually. Just so happens that our mean is green. Okay. So let me see if there's any final questions. And I'm going to sign off for real this time. Will you send a recording of this? Great teaching, insight. I will make this video available along with the session we started in the other room and this session. In Telegram, there's a channel called, I think it's called Pre-Market Channel. So yes, it takes a while for the videos to render, but they will be available for you in there. Reason why I mentioned the Aussie 6A is because margin requirement is much lower than the ES. Okay, well that's good to know. Let's go take a look at Hang on. Daniel's trading margins. Margin requirements, Daniel's trading, gain capital. And so now we want to go to currencies, Australian dollar. Oh, I think that's because you're on the other side of the pond. That's why you have low margins. Because here in America, these are the margins that we have to pay. Compared to the indices. See, the Emini Dow right now is at $1,000. Unfortunately, this volatility, well, volatility is a two-sided coin. It gives us great trading opportunities, but once it becomes so volatile, then the brokers have to raise the margins to compensate for that volatility. So, if you're trading a $250,000 account, not an issue. If you're trading a $5,000 account, big issue. I mean, the difference from paying, or not paying, but you have to think of margin as a deposit. It's like when you go to the grocery store to rent one of those rug shampooers, right? It may only cost you $20 to rent the shampooer for the day, but because it has a value of $300, you got to leave a $300 deposit with the store in case you break their rug shampooer. Now, once you bring back their rug shampooer in good condition, you're going to return your deposit minus the cost of using it. So that's how you should think of margins. But that doesn't change the fact that you've got to actually have that money sitting in your account to be able to place the trades. However, there's another side. This is a three-sided coin. You don't ever want to keep more money in your account than is required to trade the number of contracts that you've earned the right to trade. We had a guy years ago. I had been preaching this on a radio show. Get excess funds out of your trading account and put them in some interest-bearing account. I don't care if it's like, 0.001%. Just get it in some place where you have the potential to make some interest, but more importantly, you have FDIC insurance. Up to, I think it's $250,000 per account. This guy lost over 60 grand in a flash crash. His stop got jumped and it wiped him out. He wrote a long letter and asked me to please read it to the radio audience. Now, what makes the story even sadder is he was already in the process. He had opened another account, and I know this just sounds like a story, but it's the letter he sent me. The following day, he was scheduled to make the transfer from the bulk of his money, was going to go from the trading account to the FDIC account. The flash crash happened, and he was wiped. Moral of the story, of course, is obvious, but beyond that, I have a lot of respect for that guy because he picked himself up, he brushed himself off, and he said, you know what? I built the account up once, I'll do it again. And he wasn't happy, trust me. But the fact that he cared enough about the rest of the community to pen that letter and to ask me to issue that warning to everyone to not do as he did, that's powerful. And that's the power of a community. We can share in each other's successes. And when one of us, falls down and scrapes our knee, the others can lift him up. Right? Of all the people in all the world and all the things that man can do, God, in his infinite wisdom, has somehow assembled us, you and I, together, doing this thing we do called trading futures. There goes that phone ringing again. And every time it's from a different area code. All right. If I don't have any other questions, I'm really going to leave this time. Is there going to be a partner call tonight, a workshop? As far as I know, yes. Valerie's out of town, but I assume Michael and I will still do it. Okay, guys. thanks very much for attending. Based upon your feedback, I will do this again. Tomorrow's Friday. Maybe I do it again tomorrow. Maybe I do it again Monday. But again, express your thoughts in the alert trial discussion channel. Okay, let me know. And then if there's a need, a desire, then I'll do my part. Okay. All right. Thanks very much. And I'll see you guys at the top of the hour when the normal daily broadcast starts. Now, for those of you that don't attend the afternoon broadcast from 12 to 2 p.m. Eastern, I cover the Concierge Trade Alerts in great detail each day. Which ones would have been a good trigger, which ones would not have been a good trigger, and why. Okay. I usually have some topic, some theme that I latch on to each day. Now, I don't expect you to, if you're going back historically, because those daily shows, the recordings go back years, I don't know, 3, 4, 5 years. I don't expect you to sit through the entire 2-hour session from a month ago or 6 months ago. Fast forward to the point where you see me dragging this up onto the screen right here. Just keep fast forwarding till you see me do this. Because during the broadcast, I give everybody an opportunity to grab a screenshot. Okay? Fast forward to that point. And then watch and listen as I recap Concierge Trade Alerts from the night before. Be sure to write down all the questions that pop into your mind. And then when we have a workshop, or then when you and I have a mentoring session, we can go through you. And Tim is a big champion of the daily show, because he says that's where he really, really learned a lot. Okay? So that's my story. I'm sticking to it. I'll see you at the top of the hour. This room will now close.